Happy Friday out there, folks. It's Darius Dale here to present our macro minute for Friday, June 24th, 2022. Starting with markets, we have stocks up this morning, commodities mixed with crude oil leading, crypto up, dollar down, global bond yields up. Market moving headlines, signs of temporary capitulation. Global equities had their biggest outflow in 9 weeks, B of A said, citing EFPR global data. About 16.8 billion exited global stock funds in the week through June 22nd, with U.S. equities seeing their first outflow in 7 weeks of 17.4 billion. Bonds also saw redemptions of 23.5 billion. So we talked about this heading into the week on last Saturday's Around the Horn. Saying, hey, you got to cover some shorts into this sort of quarterly OPEX dynamic. You also have you're just a real vacuum of catalysts from an economic data standpoint. Next week, next Thursday, we'll get core PCE. Next Friday, we get the ISM. But going back to last Saturday, there was obviously a 2-week vacuum of nothingness. So obviously, in those vacuum periods, you don't want to be greedy as a short seller. So that was obviously the right call to cover some shorts and just let the market breathe. You got to have patience as a short seller in these bear markets. That's one of the key takeaways from the bear market analysis we did. We did a big deep dive on bear markets in our latest macro scouting report that we actually presented on Macro Voices. At least presented some of the highlights on Macro Voices yesterday. So definitely go check that out. Had a really awesome time with Eric going through each of our cycle analyses that have helped us help you make money this year, as opposed to blowing your family's net worth up, blowing up your kids' college tuition, et cetera, et cetera. Moving on, front-loading rate hikes are still very much on the table. James Bullard, as seen as the biggest hawk on the FOMC, said front-loading rate hikes is a good idea. This is today, and it's too early to discuss recession probabilities. The rate increase cycle will slow the economy to the trend rate of growth, he predicted. So clearly, there's still a very hawkish contingency on the Fed. Nothing should really change. Obviously, we've heard from Powell all week. Nothing's changed from that front in terms of forward guidance. What has changed, obviously, is this decline in commodity prices, crude, energy, ag, base metals, really filtering through into reduced policy rate expectations in terms of pricing on Eurodollars and OIS and things of that nature. So that's obviously been positive for the market for risk assets, crypto, et cetera, in the very near term. But ultimately, we do believe the liquidity cycle will continue to deteriorate alongside an incremental deterioration in the growth cycle. And so we will be sellers of RIPs in the coming days and weeks. Talk is cheap. Actions are costly. So Biden and G7 leaders will weigh a plan to curb Russian oil revenue, however the hell they plan to do that, when they meet in Bavaria this Sunday in the shadow of war, global recession fears, and a faltering presidency. Several leaders worry a midterm defeat, particularly in Congress or the Democrats, will limit what Biden can achieve on Ukraine, a French official said. Duh. Big movers. WTI crude oil up 2% this morning, little relief rally after what's been just a brutal sort of, last kind of 6-7 trading day session. Now it's only down 1% month over month. Ethereum up another 7% here, kind of big gapy relief rally to only down 39% month over month. And then Bloomberg Industrial Metals still declining, still telling you that there's some demand destruction out there. From a global economic perspective at minus 2% to down 15% month over month. Now, looking at our volatility adjusted momentum signals and probable ranges, US dollar still bullish fam, still in the middle of its range. Gold bearish fam, still basically in the middle of its range there. 10-year nominal Treasury yield, bullish fams, getting towards the lower boundary of its probable range with 8 basis points of downside, 43 basis points of upside here. High yield credit spreads, bullish fams. So it's still, not quite in the middle of the range, but not really. 35 basis points of downside, 49 basis points of upside. S&P 500 bearish fams. Short sellers have patience here. We'll get to the upper boundary of the probable range in the coming days. Minus 5.8% of downside, 3.5% of upside. VIX neutral VAMs, pretty much right in the smack dab in the middle of its range. NASDAQ 100 bearish VAMs still getting closer to the upper boundary of the probable range in the S&P. 2.8% of upside, minus 8.4% of downside. Please give me that. We'll reshort you more. Russell 2000 bearish VAMs. 5.7% of downside, 5% of upside, so a little bit more of a fair fight there. Bitcoin bearish fams here. These bearish fam signals have been working like rock stars for quite a while here. 18% of downside versus 14% of upside. Bearish fams. Ethereum, you got 32% of downside, 15% of upside. So very quickly after this relief rally we've seen since Saturday's catharsis in crypto, we're starting to get some very asymmetric risk reward setups to the downside. Not quite overbought yet, but we're now getting to the point where you're going to want to be thinking about booking some gains. If you bought the lows of crypto for a trade this past weekend, obviously you didn't get that signal from me. We're not trying to be that cute in the middle of a cross asset bear market. I think cute is very dangerous. Shanghai Composite, neutral VAMs, getting towards the upper boundary of its probable range, 1.3% of upside, 5.1% of downside. Bullish VAMs, WTI, still very deeply oversold here. Really, it's kind of a pathetic balance in the context of how oversold it is. So that's something to take note of. Obviously, this is an asset class that at the bare minimum wants to transition back to neutral VAMs, potentially even bearish. We'll see. We'll study that over the next few days and weeks. And agriculture, neutral VAMs, very similar setup. Crude oil, but instead of bullish to neutral, looking like it wants to go from bullish to or neutral to bearish. Obviously, deeply oversold here, but still pathetic bounce in the context of how oversold it is. Industrial metals, bearish VAMs, not even bouncing, just puking, already bearish, already below the lower boundary of its probable range. This is a real capitulation here in things like copper, industrial metals, etc. So with that, Darius Dale presenting our macro minute for Friday, June 24th, 2022. Best of luck out there and have a wonderful weekend.